All right, hey guys, let's look at my prep today for crude and the S&P. So in crude, I got these backwards, sorry. Put crude up here and S&P down here. So again, all the crude charts are on the top row here, all the S&P charts are on the bottom. So starting, well, I guess let's start with what do we have with crude. Well, we have a bullish inflection, and that comes from really a couple charts, one of which I dropped to a lower time frame to really lean on. And other than that, it's pretty neutral. Yes, we do have another bullish inflection down lower. I'm not even sure if that was pictured in the prep. Yep, it looks like it was just at the very bottom. So, a bullish level here. Obviously, if that breaks, though, then we're head down, quite a ways lower before we run into neutral support and then another bullish level. But other than that, it's neutral. So how did we arrive at that? The answer would be, starting with the yearly, still nothing to do here. Flat DVA, VWAP area, no prior value and intersections. It's just in the middle of nowhere, nothing to do. The quarterly is one of the main drivers for the bullish narrative today. Very, very important. We have pushed in recently to the quarter. Remember, it failed to stay in balance down. So this is a bullish reference now. But, at that point in time of going through the top-down approach, I would note, hey, quarterly extreme fade opportunity here in a rotational quarter, destination all the way up at 43. That's the read there. So we have that read. It's also a breakout pullback of prior value, as you can see. Show you the full value area. Well, maybe not. It's huge. It was quite the quarter last quarter. But anyways, it's also failed to stay inside prior value, so that's a bullish reference against that as well. So stacked bullish references here. Skipping forward to the end result here, why do I not have that as a bullish reference on the chart? Well, we'll talk about that. But as a standalone basis, bullish on the quarterly. The monthly, coming into the open, it's really neutral. We never got any kind of move into developing value for the month and then kind of the pullback to firm that up and give that extreme fade opportunity. It was just that flaggy pattern that just broke and drove straight to the other side. So I still have that as a bullish reference, and that's the one on the prep that's down lower there. I do think if we get back down here, it'll be interesting to see if that level holds. I guess you could say bearish a bit in terms of came up here and both of these kind of stacked levels right here would be bearish, almost the exact opposite picture of what we see in the quarterly. We're above prior value. We're rotational with that extreme being right there, so it's all bullish. This one being bearish with the extreme fade of DVA and then the essentially breakout pullback from prior value. But nothing to lean on really on this day because we're in the middle of a flat DVA and we didn't really, have any levels nearby to really look at. That takes us to the weekly. Today is now Tuesday, so we can use the week. And the week is where I decided to get pretty dialed in. I saw that as coming into the open, the weekly, as of yesterday, failed to in balance down, which was just intraday, right? But the weekly's gone rotational. The most recent condition shift is to rotational. So extreme fades from weekly developing value area low, I think makes sense to see a move higher. Now, why did I not mark weekly developing value area high as the destination for that move? See, it should be right here as of where it was at the open kind of. And I left that blank. I didn't mark it. Well, that's because I think we could push up structurally If we're gonna hold this bottom on the weekly, and we're gonna start forming this extreme fade opportunity on the quarterly, we could easily push $43. We could easily push $41. The monthly, if we're holding this VWAP area, could easily push 41.50, 42. And if we are going to break and hold essentially prior value even, right, and not accept and rotate around inside prior value, then where, and not accept inside this older CVA at 39.50, where are we going to go? Are we going to stop at weekly developing value area high, which was at 40.50 at the time of the open? No, I think there's too many things that say we're going to revert, even on the structural, most recent 2-day CVA, we're going to revert back up into this 41 to 41.50 area. Point of control there, if we reverted right smack dab to that, would be 41.25. So I chose to ignore the weekly developing value area high because I think there's a lot of factors that if this market is putting something together, that is, if the bulls are putting something together, then I think it can take us back up into this zone. So that's why I chose to say we're going to push up back into 40, 41, 41.50, that type deal with my scenarios. It's really that simple. What kind of trade opportunities do we have today? Well, pretty much 3 different places, especially the last one, where you could put on an extreme fade. There was even one pre-market. But extreme fade, it's rotational intraday, and I know this is a real extreme, but that's fine. We are not in a proven imbalance down. So really, I mean, DVA giving you beautiful trade locations with that. Hey, if you got caught in this one here, if you saw the turning point there and went with it, and you got stopped, fine. That could happen. All right, let's go to the S&P. Yearly, we're still hanging on here to see if this imbalance pullback is going to hold. I still think it's on. I don't think it's over. But, it's not going to hurt to see a day or two start to hold back above, 33.16, 33.18. We'll see. But this is, with the rhythm and staying loose with things, right? This could easily just be something like that. Easy. So we'll be aware of that. But this is a really, really long-term time frame. And I know we've interacted with it lately. It's been something I've talked about. But this is a long, long time frame. And we're staying very, very loose with this view here. I don't think that the acceptance picture, if you will, is quite really, really bearish just yet. If we start holding under 33.18, and can't get back above, and we start to put in some type of bear flag pattern on this daily chart, by all means, we'll shift bearish. By all means. But the fact is that the yearly is not a major usable level for us today. It wasn't a huge part of my analysis. Big driver for my analysis, and what I had is a big deal here, is that and I guess if we could go back to the overnight session a little bit further on these charts, right? We stabilized at these lows, and let's keep in mind what that is overall, right? It's after this kind of sell-off and then stabilization down here. It's a big deal what's going on the monthly, not to kind of jump ahead of myself here. Myself's multiple, maybe. We'll see. But the face ripper rally here, why is that? Well, it's an extreme on the monthly here, right? So it makes sense we could pull back. This is a confluent area. This was really the main idea for my Hypo 1 today, that we're retracing, we're continuing to retrace, and that in general, this market on the monthly coming from, pre-market down here or wherever. Yeah, Tuesday at 7 a.m. down here. We are headed towards this key inflection of a breakout pullback of prior value and an imbalanced pullback of developing value. Critical. And the market showed us into the close that that's where it wanted to get to figure out what's next. So starting more top down, again, yearly, we'll see. It's not a major player today. Quarterly, big yellow zone, because I think that is on that time frame where that market's trying to go. It's clearly shown that it had a breakdown in its imbalance, right? It's clearly shown as bear level, and it's working its way towards the other side of developing value. And in fact, this retrace to, like, if you want to talk hard right edge right now, this retrace to kind of VWAP there and the retrace to this confluent bear zone on the monthly, that's about all I need to see. I mean, this is a bearish opportunity in this market. It may not work. I could care less if it works or not. This is a place where we have a higher time frame, in this case the quarterly, telling us downside destination lower, and we have a really nice confluent spot on the monthly. So that's why it was my Hypo 1 today. Hypo 1 didn't unfold today, but Hypo 1 today might be exactly what plays out over Tuesday, Wednesday, Thursday. You have to keep that in mind. A lot of these really long-term VWAP narratives, they take a couple days to unfold at times. Now, do I put it as my Hypo 1 thinking it's probably not going to happen today and it may take several days? No. I put it as my Hypo 1 because I think it could be the key scenario that unfolds that day. But with that said, sometimes these things take more time. So I think that's what we're seeing here. I'm still kind of in Hypo 1 full-on mode here. In fact, you could see, into the close, that reaction, the sellers starting to get more aggressive. We could see sharper kind of selling coming into this market as we push that bear zone. And, so far we, have been able to retrace, 15 points or whatever it is from that high. And, we'll see. I think, like I said in the DMI recap, it's important what happens overnight and tomorrow with S&P. It's a big deal here. In terms of coming into the session and the weekly was, rotational / potentially starting to get imbalanced up, kind of in that in-between phase. So, around 7, 8 a.m. here. It's made a large rotation higher. That kind of close rally that we saw overnight session kind of stabilizing here, which is a little bit bullish. So that kind of makes sense that we could continue retracing. And guess what? 33.25. That sounds like a familiar type area. It's just beyond the bull zone here. So, market trying to kind of get in balance on the weekly and maybe revert towards some of this structural balance that we had from the prior week. It makes sense that Hypo 1 is continue retracing higher to find sellers around the 3,300 essentially monthly confluent level. We do have an old CVA there and whatnot, a small one, but that's kind of irrelevant for the most part. Hypo 2 is, hey, we retrace up to 3,300. And Hypo 2 could be something going forward you might see as my Hypo 1 tomorrow if we've broken above this bear inflection on the monthly. You'll see me bullish from that area, and that'll be, Hypo 2 from today is going to be Hypo 1 for tomorrow if that's the case. And then Hypo 3 was just knowing that we might flounder around a bit in perhaps yesterday's structure. And if that was going to happen, then what do I have in here? just a whole host of CVA levels. And so we'll just use those and take little scalps in between them and things like that. So that's why I put this short here. Not that it was a good trade for students like you guys, right? It's a VWAP trade location, so really not ideal, not quite a good enough of a narrative there. Really, this was a market which is rotational and remained rotational, showing this extreme fade long opportunity, really. But nothing to lean on structurally, narrative wise, nothing in that area. So it's not really a great trade. I like it here because we've shown that we can hold back above that CVA, and this is just a little dip back below it to push back up, right? What about this imbalance pullback over here? Well, I don't love it because I'm really in a frame of mind where I want to be looking for those shorts and whatnot. And, I think a lot of times if you go for these cheeky little barely any reward left for your risk trades in the face of a bearish narrative, that doesn't make a whole lot of sense. So no, good trade listed in my recaps or anything for this pretty standard flaggy, nice, weak selling imbalance pullback, really, to kind of ramp up into that 3,300 area into the close. But what are you going to get long at 32.90s? Depends on what your time frame is. But yeah, that's my logic behind hypos and what I thought about the session today.